Welcome everyone, welcome to this very special session. Diwali is right around the corner, and with Diwali of course comes the Muhurat Trading session. Now, for the uninitiated, Muhurat Trading is a very special 1 hour session every year when the stock market opens, just because people consider it very auspicious to invest during this time. Now, all this is sorted, but the question then comes, what to buy? I have with me Mr. Pankaj Pandey, our Head of Retail Research. Sir, welcome to the show and thank you so much for making time for us.
Thank you, Vishu, and wish all the viewers a very happy Diwali.
Absolutely. Sir, let's get straight to the meat of the topic. We'll start from the top. The global outlook right now looks volatile. At the same time, the domestic factors make us happy. What do you think about the markets right now?
So Vishu, last 1 year what we have seen is that Nifty has been hovering around the psychological level of 25,000. Now for markets to do well, you need a few things. So for example, on the earnings side, FY25 was a year when the earnings were quite muted. FY26 is when, which is this year, we are seeing earnings have started to recover to about high single digits. And FY27 is when we would expect a normalization of earnings to about 14-15 odd %. The other aspect is the valuation aspect. Now, last 1 year, we haven't seen much of a price performance for the market. So this year, earnings are going to grow at 8 odd % and followed by about 14% kind of earning growth in FY27. So from a valuation perspective, we are trading, or we would be trading at about 20 times forward, which again is a reasonable multiple, I would say. The last thing to sort of look at is the liquidity aspect. Now here what we have seen is that because of geopolitical tensions and tariff wars, FPIs have been selling in the market. But when we look at the domestic liquidity scenario, despite a fact that the last 15 months, we have not seen positive returns in the market, the domestic inflows have been pretty steady, and which gives us confidence that a combination of these three things ideally should lead to inline performance of the market in tune with the earnings, and which is why we expect that the Nifty to trade higher 1 year down the line to levels like say 27,000. That is the 1 year target which we are carrying on the Nifty.
Right, 27,000 really does sound good, sir. Now, getting straight to what to buy, what are some of the themes or sectors that you think are poised just right at this moment?
So Vishu, there are two broad themes which are there in the market. One is the consumption theme and the other one is the capital expenditure as a theme. Now last few years, capital expenditure as a theme has been sort of doing very well because we have been spending about 3% of our GDP on capital expenditure across various sectors. But last few months we have seen monetary stimulus coming from the government. Along with that, fiscal incentives have been given, and which is why consumption as a theme is making a comeback. And which is why our recommendations for next 1 year is a combination of some of these consumption theme plays along with some capital expenditure as a theme plays. Capital expenditure as a theme will work structurally over a long period of time because we carry a lot of young population. We need to sort of create jobs, which is why we feel that going forward next 5-7 years, capital expenditure is going to be the main theme. Whereas the consumption as a theme is going to work for the next 2 or 3 years. That is what we expect.
Right. So consumption and capital expenditure. Let's pick up consumption as a theme first. I think the first pick that we have in our Muhurat stock picks is HDFC Bank, which belongs to the consumption sector. Why this pick, and what are our targets, and what are the upsides to this stock?
So Vishu, you rightly highlighted that banks or BFSI as an entire space is one of the biggest proxies for consumption, and HDFC Bank is one of the largest private sector bank, and this bank has a history of growing at a pretty steady rate despite the volatility what we have seen in asset quality. Now last 2 years when HDFC got merged with HDFC Bank, the credit deposit ratio of this bank shot up to 105, and our sense is that next 1 year down the line this should normalize to somewhere about 85-86 odd %. And because the credit deposit ratio had gone higher, so bank had sort of gone slower in terms of lending, and that sort of impacted their growth rates. We expect this to sort of normalize next year, and which is why I feel that this bank should do well with a target price of 1150, which is an upside of about 17-18 odd % from current levels.
Right. So that was our first pick, HDFC Bank, with a target price of 1150. So our next pick is CreditAccess Grameen. Why this stock and what are our targets?
So on CreditAccess Grameen Vishu, we have a target price of 1600, which is an upside of about 15 odd % from current levels. Now, this company is one of the largest microfinance players, having an AUM of about 26,000 odd crores, and has been operating in this domain for the past 3 decades. Till FY24, growth was pretty good for the industry, so this company itself was growing at about 30 odd %. FY25 is when the over leverage issue came up in the industry, and that sort of impacted the industry, including this company. As a result, the growth rate came down to about 2.5%, minus 2.5% in fact. And so some of the concerns which cropped up was that the GNPA, which used to be about 1.5%, had shot up to 5%. The credit cost in FY25 had shot up to somewhere about closer to 8 odd %, and so as a result of that, profitability took an impact. But our sense is that from second half of this year onwards, growth should make a comeback to mid to high single digits, and which is why we feel that going forward, growth will sort of normalize for this microfinance lender, and which is why we recommend this with a target price of 1600.
So that was our second pick, CreditAccess Grameen at 1600. Next up, let's take something from consumption sector itself. I mean, as a sector as well, and actually literally as well. Allied blenders and distilleries. Why this stock is our pick, and what is the target price for it?
So Vishu, the reason for recommending this stock is that this is the 3rd largest liquor company in India, and liquor is all about premium consumption, and we are clearly seeing this trend being visible not only with this company, even with others also. So this company, the prestige and above segment, which is the premium segment, used to contribute somewhere about 18% of their overall volumes and top line, say in 2018. Now that jumped to somewhere about 40 odd % in FY25, and our sense is that with this kind of a trend continuing, by FY27-28, this should be somewhere about 50 odd %. Now what it does is that it improves your gross margin. So we are expecting their gross margins to improve from say 42% to 45%, and obviously that will also flow into their EBITDA margins. So EBITDA margins are expected to expand from say 15 to 18 odd %, which means that top line growth could be in high teens, and the bottom line growth could be 30% plus. So this stock is all about the premiumization as a theme, which is panning out on the consumption side, which is why we recommend this stock with a target price of 640, an upside of about 17 odd % from current levels.
So that was our third pick, Allied blenders and distillers, with a target price of 640 rupees. Next up, let's pick up Kaynes Technologies, sir. Why this pick and what is our target?
So Vishu, electronic manufacturing is shaping up in a big way domestically. We have seen mobiles doing very well, both in terms of domestic production and also for the export purpose. So what I am recommending is Kaynes Technology. It's an EMS player with a target price of 8900, so quite an upside of about 30 plus % at current levels. Now, reason for recommending this stock is that this company is into PCB manufacturing and also venturing into semiconductor as a space. And this company is doing a pretty hefty capex of nearly 4700 odd crores. So about 3300 odd crores in the semiconductor as a space, and about 1400 odd crores for putting up PCB, which again finds application in number of sub-segments. This company has been a very high growth company. So last 3 years, this company has grown somewhere about 58% CAGR. Our sense is that with the kind of capex it is doing and the overall vibrancy of this sector, this company will be growing at 48 odd %. So valuations are rich, but I think the growth for this company is also quite superlative compared to the markets, and which is why I would want to recommend this stock with a target price of 8900, an upside of nearly 32 odd % from current levels.
That was a fourth stock pick, Kaynes Technologies at 8900. Next up, we have Greenlam Industries. Sir, why the stock and what is our target price?
So Vishu, reason for recommending Greenlam laminates is because we have seen last few years the real estate sales have been pretty good. Interest rates have been cut, so we expect this momentum to sustain. And when these real estate deliveries happen, the demand for home building product goes up. Greenland Laminates is one of the market leaders in the laminate space, having a market share of nearly 18 odd %. And they do good amount of exports. Their export market share is somewhere about 27, 28 odd %. Now this company in the last 3 years has done a capex of nearly 1400 odd crores. The benefit of that is going to accrue in the years coming forward. So on the laminate side, while this company has already been doing good, their capex is largely towards particle board, and which is why the overall opportunity size for this company is going to increase from say nearly 11,000 odd crores to nearly 49,000 odd crores. And current revenues are somewhere about 2,500 crores. Company is aspiring a revenue of nearly 4,500 crores. Which means that they are looking at a high teen kind of a growth. Now, our sense is that with better economies of scale, the margins are also expected to improve, say from 10% to nearly 14 odd %, which means that you will see multifold jump in their profits, and which is why I am recommending this stock with an upside potential of 20% to a target of 300 rupees.
So that was a fifth pick, Greenlam Industries, with a target price of 300 rupees. Next up, let's move on to Capex as a theme, sir. Let's pick up a large cap first. How about L&T? Why this pick, and what is our target price for L&T?
So L&T is a company which carries a market cap of more than 5 lakh crores. Now this is one of the largest engineering and construction companies, having an order book of nearly 6 lakh crore plus. And the order prospects are somewhere about 14 lakh crores. And this company is into almost all the segments you name, whether it is defense, whether it is infrastructure, data centers, you name all the new themes, this company is present there. In addition to that, they've got a fairly large presence even overseas as well. So our sense is that this company has guided for a overall order growth of about 10 odd %, which they would be easily able to meet. Now, some of the challenges which this company was facing, for example, in some of the unviable assets, so for example, Hyderabad Metro, and our sense is that the company is in the process of exiting some of these unviable assets. And even when we look at some of their subsidiaries have started to do well. So for example, our sense is that IT is at the bottom end of the valuation of a 4-year range if we look at. So their IT subsidiaries are expected to do well. Their finance subsidiary is already doing well, which is L&T Finance. So combination of this company doing well plus subsidiaries doing well, our sense is that this company should do well with a target price of 4,500.
So that was the first stock pick in the capital expenditure theme with L&T with a target price of 4,500. So let us talk about AIA Engineering next. Why did we pick this stock and what is our target?
So Vishu, reason for recommending this AIA Engineering is that last 2-3 years this company has done nothing. In fact, this company is one of the largest producers of grinding media, which is typically used for mining operations, basically crushing and grinding for iron ore, for copper, for gold. And last few years, because of geopolitical tensions along with trade related challenges, this company was not doing well. On top of it, some key markets like Brazil witnessed anti-dumping duty on this company along with countervailing duties. Our sense is now things are changing for sure because one, the countervailing duty plus the anti-dumping duty in Brazil has come down. The other is that company is expanding or putting up extra capacities in key markets like, say for example, they're putting a capacity of 50,000 tons in Ghana basically to cater to the gold mining industry. Then they are putting another 50,000 tons in China to again cater to customers in South America. So basically they are going closer to the markets. And which is why I feel that despite the fact last few years this company has not done much in terms of volume growth, in terms of top line growth, things will start to change from FY27 onwards. So in FY27 we are expecting a volume growth of about 17% and something similar top line. So we are seeing changes happening for sure for the better in this company, and which is why I am recommending this stock with a target price of 4060, an upside potential of nearly 25-26% from current levels.
So that was AIA Engineering with 4060 as the target. Sir, our final pick of the day is data patterns. Why this stock and what is our target?
So Vishu, defense as an industry is making a big comeback. We're seeing structural changes in the industry, and given the fact that we need to do a lot of catch up, our sense is that this space will continue to require a lot more investments, and which is why we are recommending this data pattern with a target price of 3560, an upside of nearly 30%. Now, reason for recommending this stock is that this company derives more than 50% of their revenues from radars, which is crucial for the entire air fleet, the likes of Sukhoi, Tejas, or the future projects like AMCA. Now, our sense is that this company will be a beneficiary of the opportunity which is going to unfold in this segment. The 17% of the revenue of this company comes from electronic warfare, which again is required in various electronic components. On top of it, this company is also a play on microsatellites, and we are already seeing the benefits of that accruing, and this space is also sort of witnessing a lot of traction. In addition to that, even space-based radars is something where this company is expected to sort of play a role. Now, this company has got an order book of about 1,050 odd crores. What the management is guiding is nearly an order book of or order inflows of nearly 3,000 odd crores. So probably this year, FY26, we'll see somewhere about 1,200 to 1,500, and the balance coming up in FY27. So this company is expected to sort of deliver 22-23% kind of a growth rate, something similar in terms of bottom line growth. So as a defense segment, I think this company is going to be beneficiary of a lot of new technologies which we are going to incorporate, which is why I'm recommending this stock, upside potential of 30% and target price of 3560.
There you have it, the final pick, data patterns with a target price of 3560. Well, but the session is not over yet. We are yet to take up a few questions which we received from our lovely audience while during the time of registration. But before we go there, we'll take a 30-second break. In the meantime, we'll put up all the Muhurat stock picks on your screen with their target prices and their upsides. So grab a pen, note them down, or just take a screenshot, up to you. We'll be back in just 30 seconds. Here are the stock picks on your screen. Welcome back, and let's get to the question and answer session now. So the question that we received from a lot of people was on gold and silver. I mean, they have had a massive rally, and everybody while at one point they want to buy, at the same time they're thinking, is it overvalued? Is the price too high right now? So what is our outlook on gold and silver right now? Should we buy them this Diwali?
So Vishu, gold and silver have rallied more than 50 odd %. So this kind of a rally is happening too soon and too fast. And while yes, there are concerns globally in terms of growth, in terms of inflation, and also the future impact of tariff wars, our sense is that this kind of a rally is sort of not sustainable. Typically, when we advise people to sort of keep a gold allocation of somewhere about 5 to 15 odd % of their overall portfolio value. So given the fact that gold and silver have rallied so much, and our sense is that probably this is not the time to sort of go very aggressive on gold, which is why we would recommend a lower allocation of 5 odd %. Structurally, gold looks very good because somewhere down the line you are seeing debasing of currencies happening globally. The global central banks are piling on debt, and that is going to put pressure on currency. So which is why gold as a store of value is going to find favor. But last year also we have seen gold rallying 25-26 odd %. This year the rally is upwards of 50%. This kind of a move is capturing a lot of anxieties, which is why not a time to sort of go aggressive on gold at this point in time.
Right. And how about silver, sir? There's so much information going around social media, especially saying silver is going to be the next gold, wherein it's got not just storage value and for jewelries, but there's so much industrial use in the green space, EVs everywhere. So, what do you think about silver right now?
So, Vishu, from a demand supply perspective, silver is expected to remain in deficit for the next 2 years. And like you highlighted, new areas like green tech, the demand for silver is definitely coming from there. But again, I will point to a fact that we have seen more than 65% plus kind of a rally in silver in a very shorter span of time. And which is why, despite the fact that you hear reports of shortage of physical gold, and as a result of that, the gold prices have gone, silver prices have gone up. I would still recommend not to sort of go full hog in silver, despite the fact that it is demand-wise, it is in a favorable situation. So, not a great time to chase gold and silver at current levels.
So, the second most popular question that we have received from our audience is on IT. With so much volatility going around in the global markets and trade barriers coming up and the artificial intelligence also cropping up, what do you think about our IT stocks right now? Of course, they have taken a beating, but going forward, what do you think? Are they in the buy zone right now?
So, Vishu, domestic IT industry has seen a bit of a softer growth. The dollar revenue growth for the industry used to be about 7 to 8% in terms of dollar revenue growth. That has sort of come down to about 3 to 4 odd percent. And YTD, the IT index itself is down about 15, 16 odd percent. Now, globally, what is doing well is the AI-led stocks because somewhere down the line, there is a belief that AI is going to solve a lot of complex problems and which does not require manpower. Contrary to that, our industry requires good amount of manpower, and you see a good amount of linearity between top line growth of Indian IT companies and manpower addition. Now, that is a challenge which is or a paradox which is being faced. Our sense is that globally this AI related theme has been sort of doing very well for past few years, and valuations are definitely sort of gone up. So I wouldn't really bet on a theme which is already done so well. So our sense is that as and when this theme sort of fizzles out or consolidates, that is when the Indian IT industry is expected to do well, because while AI is definitely going to be there, but it is not probably going to solve all the problems, so probably it is still quite hyped. And which is why we believe that Indian IT industry could be a good contrarian pick because one, the growth can pick up. The other is the valuations are at 4 years of historical lower levels. So a combination of these two, we would want to believe that IT can sort of do well. But it is still very difficult to put a time frame because the AI-led boom is happening not only in US, it's happening even with the Chinese markets. So it needs to sort of consolidate or probably temper down a bit for Indian IT to perform. Valuation-wise, the Indian IT looks attractive. It is very difficult to put a time frame, but I would want to believe that in the next 1 year, that should happen.
Sir, another question that we've received is, it's a theme based on exports. We have sectors like pharma or textiles wherein there is heavy export dependence, and given the global volatility right now, what is the outlook on these sectors?
So Vishu, overall sense is that on pharma, we have got a clarification that tariffs are not going to be levied on generic, and which again is a very welcome relief for the industry because we do somewhere about exports of about $10 billion odd to US. So it's a welcome relief. The other is that we've seen Biosecure Act, a bit diluted version has been passed, which again is an opportunity for the entire CDMO or contract-based manufacturers. And so overall scenario for pharma is sort of getting better. And domestically, we have seen that within this entire healthcare theme, hospitals have been doing very well. Largely, again, it's a sort of a consumption theme. What you see is only 5%, or the listed players have only 5% of the overall capacity, and which is why this sector can sort of deliver a high teen kind of a growth. Exporters, again, in the pharma side will continue to remain volatile depending on how things pan out. But in general, the biggest worry has been put to rest. But on the textile front, things are still a lot more challenging with 50% kind of a tariff. A lot of categories are going to witness a lot of challenges. And while the players are offering discounts, our sense is that some of them could be making losses in next quarter. Scenario can change because see, we are one of the largest producers of cotton, and our overall exports is largely cotton based. Now we have signed FTA with UK, so overall sense is that we will find alternatives for this US market. But that process itself is going to take some time. So in the meantime, textile could be a sort of a challenge in terms of growth, in terms of margins. But pharma is definitely out of the woods from a outlook perspective.
So that's all for today. That's all we had for you. I hope this session was valuable to you. We were able to add some value to your investment journeys. With that, we'll call it a wrap up and a very happy Diwali. Thank you for watching us.
I wish all the viewers a very happy and prosperous Diwali.